Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Okay, so the big picture continues to be centered around the dark blue late September 24 to late March 25 bearish Andrews pitchfork. Prices based themselves 4 weeks ago and then again briefly last week on the middle time, currently at 90.12, as well as the 50% Fibonacci line for 2025 at 91.33. The market had passed through both times over what had been resistance at the combined 38.2% Fibonacci line of the October 20 to May 23 move at 92.56, as well as the mauve medium moving average currently at 93.33. and the gold long moving average currently at 93.25. However, the push higher was met by a fresh cap from the combination of 3 specific nearby congestions. The first is the 50% Fibonacci line of the October 23 to May 24 move at 94.80. This is an integral part of the 93.95 to 96.06 congestion. The second is the bright red neckline extension. That's currently at 94.65 of the recent November 24 to February 25 reverse head and shoulders bottom. With finally the third being the green flatlining short medium moving average currently at 94.75. Last week the market managed a brief foray higher over these but failed to stabilize and dipped back down to the mauve medium moving average and the gold long moving average for support. We are today following on from that ammunition gathering exercise, and we've pushed higher over the bright red neckline and the green short medium moving average, testing the 2023 high at 95.50. This 95.50 level is very important. It's the top of a small February base congestion, which is between 93.50 up to 95.50, which only added to some of the recent stickiness of this market of holding where we are. Now, I've mentioned here so many times before of the 3 overhead congestions which we seem to be working our way up through. The first is between 91.83 to 91.86 and is the weakest of these congestion areas, though 2 weeks ago we did see prices dip into this before pulling back upwards. The second is between 93.95 to 96.06 and is the one we have become clogged down within these past few weeks. The final one is higher up between 97.50 to 99.95. Overall, things are much as I said last week, and I quote, "We seem to have yet another attempt higher in the offing, but I am beginning to wonder how often prices will keep ramming into this overhead 93.95 to 96.06 zone before it becomes discouraged." Just bear in mind this large congestion area we are within, and which stretches further overhead between 93.95 to 96.06. It may take some time to chew through it, and that's the end of the quote. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time and all affecting the market in their own way. To start with, and it is by far the most consistent one, is the bright red shadowy bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time of this, which is currently at 26.45. But, as I stated 6 weeks ago, and I quote, "It was a tenuous hold over it and prices dropped down through it and have remained below, pushing further down." However, this pattern still works at the lower time, which is currently at 23.36. I added 5 weeks ago, and that's the end of the quote, and I added 5 weeks ago, and I quote, "This is one to keep on this daily chart, as the low of this move has been right on the bright red lower time." And additionally, nearby we have the bright green neckline currently at 23.56 of the October 22 to May 23 head and shoulders top, and the purple neckline, currently 23.63, of the March to May 23 head and shoulders top. Both these have been pierced, but we have not as yet closed below either. End of quote. Since then, we have seen the bright red lower time punctured, but repaired, with no closes below it, and it worked pretty well at showing the low of the recent move down. The bright green neckline was breached, but with only one close below it, and the purple neckline was breached with two closes below it, but one of those was barely below. Thus combined, these eroded the bearish incentive enough to halt the immediate declines, basically in between the bright red lower time below and the bright pink lower time above, which is currently at 24.32 of the now breached and possibly looking to be repaired, bigger, longer term, November 2015 to April 20 bullish Andrews pitchfork. Over the last 3 weeks, we have seen a number of attempts at piercing higher through the significant 50% Fibonacci line, December 23 to May 24 move, that is just above at 24.54. Now, I reference this 50% Fibonacci line because I did say 7 weeks ago, prior to all the big moves down, that, and I quote, in truth, I could see any significant move down carrying on till the 50% Fibonacci line of the December 23 to May 24 move at 24.54, end of quote. The reason I said this was because prices finally broke down through the previously broken, then repaired, then finally broken, very shallow but quite wide, October 24 to April 25 bear channel. This, back then, gave a primary target at 23.17 and a secondary, harder to achieve target X at 22.10. The primary target was achieved, but as for the secondary target X, well, as I said 3 weeks ago and ever since, and I quote, I'm not so sure it will be, though it does complement the July 24 low at 22.09.5. I'll leave it on for a little while longer, end of quote. Now, I was contemplating retiring it these past 2 weeks. I think today I will retire it after this commentary. So looking back 3 weeks ago and ever since, I said, and I quote, right now I'd say the market's contemplating one of two actions to either treat this as a potential bearish halfway hesitation move or do what it did back in July and August last year at approximately the same levels and turn back upwards. I am watching prices and their reactions to the overhead pink lower time and the bright red lower time below, and I'm also on the watch out for any false breaks as well, end of quote. Last week and the week before, we saw prices move back up over the bright pink broken lower time, but not make much real progress higher. Indeed, the action since early to mid-April became a small rising wedge pattern, and that's currently 25.01 to 25.23. This pattern, as I said 2 weeks ago, and I quote, does not favor a move higher or lower, as breakouts occur in both directions, and their breakouts can be somewhat unreliable. That all being said, I'd keep a close eye on this small pattern in case it becomes indicative of a larger move, end of quote. 2 weeks ago, we had a break lower, but it has not been sustained, and I regard it now as a false break lower, so I am still carefully watching what we do at the bright pink broken lower time, and today it looks like we are having a significant attempt higher through it, though it's still all will be just possibly be just another false break, so just be cautious about it for the moment. LME 3-month lead. In the big picture, for quite a while now, we have seen continuing interest in this, the big picture, the big picture, has indecisive moves. So we've seen interesting, if indecisive moves. The key features here, and some of them have been here for a while, all relate to a very large descending triangle or a related descending wedge pattern. Both are made up from above by an early July 24 to early March 25 purple broken downtrend, currently at 1951. And also for now by a very close bright red broken early August to late December 2024 head and shoulders neckline, currently at 1954, though it could also be from below by a dark blue also breached and also possibly broken neckline extension, currently at 1896 of the July 23 to February 24 head and shoulders continuation pattern. The bright red neckline extension below is for a descending triangle. The dark blue neckline extension below is for a descending wedge pattern. So you see the two. 11 weeks ago, prices broke higher out of this pattern, breaking once more upwards 8 weeks ago, in both cases over the declining gold long moving average, currently 2012. Back then, they both peaked at or just under the December 2024 high at 2103. In the whole process, the market made a small March-based double top pattern, even Adam style. The market turned lower and achieved both the primary and secondary targets below for this pattern, but prices continued lower. This tied in with something I had seen for the past few months, the possibility for the action since the start of December last year, setting up to make an ascending scallop pattern. I even suggested 6 weeks ago, and I quote, "The market may try down towards the lower levels, but then turn and go for the topside targets," end of quote. So, to recap the more recent action we have created over March and very early April, both an ascending scallop pattern and a double top pattern. Additionally, we also saw the market in early April break down through the bright red neckline and the dark blue neckline. The move higher over March and early April became a false break higher. And whilst we saw a big move lower, I also added 5 weeks ago on this move lower, and I quote, "I would like to see some more action down here to confirm that this is also not a false break," end of quote. Well, we didn't see that necessary action or the confirmation, and prices from mid-April until the last 2 weeks have moved back up over the dark blue neckline extension, over the bright red neckline, eventually over the purple downtrend extension. All this negated the downside targets for the descending triangle pattern. Then late last week, what had been the overhead descending resistance of the medium moving average, currently at 1980, running in parallel and a little higher to it, to the broken purple downtrend and the capping prices, it was breached with a close over last Friday and halting just ahead of the overhead green short medium moving average, currently at 1987. This is yet another break, this time higher. Ahead we have a congestion area mainly made up from the lesser Fibonacci lines between 2001 and 2003, plus the which we've touched today, slowly declining gold long moving average, currently at 2012. We're also within a small congestion area between 1971 to 2021, dating from early February to very early March. However, it seems that the market's having a determined attempt higher from last week and into this week, and this has allowed me to draw a bright green early April to early May bullish Andrews pitchfork in an attempt to show the bullish angle of attack of the very recent market. The market is right now in between the middle time below, currently at 1986, and the upper time above, currently at 2036. This pitchfork looks good right now, but it is early, and I would happily finesse it to a shallower bullish shift pitchfork or retire it completely if I thought it appropriate. This now leads me once more to make a point I've been making all this year, and I will continue to do so going forward. It has been and still is to me the most important point of all in this market. So at the end of December last year, we saw that 2024 had created a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern. And this is where we have this week a conflict. You see, last week here was a weekly key reversal up, and we are this week already seeing a suitable follow-on higher to this pattern. So it all comes down to whether one should regard this past week's pattern as a temporary aberration, and the big longer-term bullish annual patterns still hold sway, or if this might be the beginning of something else. Right now, I'd still favor the big, longer-term bearish pattern, but I wouldn't mind a relief of some of the bearishness and a definitive outcome to the question of the big descending triangle stroke descending wedge pattern. The question, which one is it?
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.